Hi everyone, welcome to the Fund Finance Expert Talk. I'm Mike Mbayi, Head of Banking and Finance of the Luxembourg full-service law firm Praxio. The Fund Finance Expert Talk, you know the formula. There are three main objectives. The first is to inspire, as we are discussing with industry leaders about their career path. The second is to teach, as we discussed about technical points. And the last is to inform, as there are market updates. And for this installment, I have the pleasure to welcome Scott McMunn. Hi, Scott.
Good afternoon. I got to say, Michael, great introduction. It's not often I've been classified as an expert in fund finance. I'd like to maybe say I'm an enthusiastic amateur, but hopefully we can have some good time and enjoy the session together.
Thank you, Scott. Scott is CEO of the LMA, so the Loan Market Association. And maybe you can give us a further introduction about yourself and the association.
Absolutely. So as you said, I'm the Chief Executive of the Loan Market Association. And if I start with myself, my background is, I joined a financial institution in the mid-90s, a small UK building society, which just converted to a PLC. Back in those days, we had a significant amount of capital and excess liquidity. And fortunate for me, right time, right place, it was really exciting to be part of an entrepreneurial buy-side firm that was investing money in emerging asset classes. I was fortunate in the early days to be involved in leverage finance, acquisition finance, the early days of securitization. And then as we moved into the 2000s, return on equity became almost the preemptive point for many of the institutions. And I was then again fortunate to be involved in the restructuring or the portfolio allocation of those assets and create credit protection to reduce risk weighting. So almost like the early days of portfolio management and credit risk insurance. I moved onto a different seat in the late 2000s, joining an investment bank and running a prop business, an investment trading business. And then returned to traditional buy side, running an asset management business. So my journey after banking, I went to set up a private equity firm and then was involved in setting up a US mortgage company, a US mortgage fintech. And then back end of last year, I was fortunate enough to be offered the role running the Loan Market Association. So a really interesting journey. And if I take a second and introduce the LMA. I go back a year ago, and when I was approached to look at running the LMA, I thought it wouldn't be exciting enough for me, and it wouldn't be a position I would want to do. I just had a perception the LMA was, perceived as a bit lazy, a bit backward looking, and reflecting on maybe a loan market of 10 or 15 years ago, rather than representing the loan market today. I fast forward 12 months and hopefully you and your audience will see some of the things that we've done. But the Loan Market Association is the respected and authoritative voice of all the loan markets. So the buy side and the sell side, investment grade, high yield, leverage finance, real asset finance. And then the continuum extends into certain asset classes, which we'll talk about, such as fund finance, credit risk insurance, CLOs, export credit, commodity and trade finance. And we're really, really fortunate. The LMA has nearly 900 member firms from large banks, law firms, technology firms and vendors and solutions providers across maybe 70 countries. So we represent Europe, the Middle East and Africa. And when you have such a strong voice, Michael, of so many members, we are truly a unique proposition to handle the demands of our members on the asset class. The loan markets obviously being, pretty significant and pretty scalable in size. So it's a great place to work. We have a great team here at the LMA, and we rely heavily on the support of our members. And ultimately, in the same way you have your 3 points of, the purpose of this call, the main purpose of the LMA is to look to enable liquidity, efficiency and transparency across the loan markets, and then the introduction of adding sustainability to that to look at sustainable finance.
Thank you, Scott. Thank you. Indeed, an interesting career path. So You are, yes, the CEO of one of the main finance association in Europe, Middle East, and Africa. So it would be interesting to know, understand the challenges that you had during your career, and what you learned from these challenges.
Yeah, I think I break it into two parts. I think some of the challenges personally that I've experienced through my career is how firms handle change and how firms handle difficulty. So certainly some of the positions I've been holding and running risk and running businesses has been through periods of turmoil, whether it goes back to LTCM in the 1990s, whether it goes through to the early 2000s with the first technology challenge and some of the reduction of liquidity. Obviously, we've got the GFC, and then we've got a period from 2008 through to 2000 and maybe 2022 with incredibly low and very, very predictable interest rates and a real lack of volatility, but still a dependency on central bank financing and QE. And I think the challenges that arise from all those events are all very, very different. But what is really, really common and what is consistent is it's important to have access to liquidity. It's important to actually stay ahead of perception and how you actually dispel some of the myths and how you build confidence. And then at a personal level, I think navigating all those challenges is how you actually consider your own career path. What do you need to do to pivot? How do you look at your mentor or your leader? Make sure that you're kind of aligned with someone with a clear vision, a clear strategy, and someone that is able to back it up with the ability, the competency, and probably the dedication to actually drive that. So I've jumped around a little bit in my career, and I've been lucky enough to hold senior responsibilities across different businesses. But I think all of them certainly has been driven by having a real mentor, authoritative father figure who you feel you can trust, can counsel you, and certainly has the capacity to exceed his own personal goals. In terms of the LMA, I spoke a little bit about the repointing of the LMA to reflect today's loan markets, and I think some of the challenges have been and are currently is how do you actually engage members? How do you actually penetrate within institutions and have key stakeholders who are passionate to drive the cause, whether it's contributing to a working group, whether it's rolling their sleeves up and driving engagement with the regulators, whether it's actually using their own time to mentor and counsel and advise some of the junior members of the association. So we are dependent on the time and resources and commitment of our members. And it's a challenge sometimes, Michael, when they have a day job. They don't work for me. They give what they give voluntarily, and you've got to make sure you've got the same common goals and ultimately move away from just doing stuff, but actually get into doing things which are measurable, impactful, and actually make a difference to their own careers or their firm's goals and objectives as well. So we're never short of challenges, and I think the other really interesting thing is the pace of change in financial markets. We're moving from 2 years ago where not many people would have spoke about private credit, and all of a sudden private credit is now the significant talking point of many of the articles in the financial press. Capital formation, borrower demands, the ability to access capital, and even at the purpose of this call, the significant emergence of size of fund finance. Fund finance has been around for many years, but the growth and scale and the innovation of fund finance, and then you apply it to technology, Web3, large learning models, and AI, tokenization through blockchain. There's so many interesting developments in the technology space, and a big challenge is how do you ensure you have the skill set and the capacity to handle that. So there's a lot going on, Michael.
Thank you, Scott. And coming back to fund finance, so why this is in the scope of the LMA?
Well, it's a great question, and I've been asked that question quite often recently. So if I try and tackle it and cover it from a couple of different angles. Firstly, we are a member-owned firm, so our members make a subscription to the LMA every year, and our work has to be informed by what our members want us to do. So many of our members are obviously banks. We have a significant number of banks. Much of the historic fund finance subscription lines has been provided by banks, so commercial banks and investment banks. So many of my members have been involved for a long time in providing subscription finance. Now, what is subscription finance? It's a loan. It's essentially a financing to a GP to support some optionality that they want to have around the business. So fundamentally, it's a loan. The second element is, you look at who benefits or who are the users of fund finance. It's GPs and impact on LPs, particularly when you look at NAV lending and some of the other type of funds finance optionality. And again, my members range from the large sponsors, some of the private equity firms, all the way through to private credit firms, infrastructure, real estate assets at the GP level. And the LPs, we have a lot of our members, insurance companies, asset allocators, pension funds, who are LPs in some of these structures. So the simple answer is the product is a loan, and my members are involved in actually originally providing that finance as a bank. Some of the new providers are actually credit funds or multi-strategy funds, as you know, who again are members of the association. And then I have GPs and LPs. And if I try and close off the triangle with a third leg, Michael, I think it's important for the LMA to be involved because of the news and the growth and the headlines that's now being associated with the asset class, and some of it positive, some of it negative. But fundamentally, all of those things tell me that the LMA needs to be doing something. We're working with our members to look at what that something is. So not just doing stuff, but look at things which are meaningful, which I'm sure we'll get to talk about. And again, to draw a line under it, it's $1 trillion market. It's a significant market in terms of current size of financing. And it's something which, given the size of private equity, private credit, and the financing GPLP structures, is going to get bigger.
Thank you, Scott. And I think that indeed you touch a point. So when you talk about the fund finance industry, there are two keywords: growth, because there has been significant growth of the industry during the last few years, and also innovation, which is actually in the DNA of the fund finance practice, because fund finance is a blend of finance practice and investment fund practice. So what are your thoughts about the industry as such, and yes, the pace of change and growth in the market?
So let me share my age, Michael, and I'll share a little anecdote. I remember back in the 90s, I saw the first CFO transaction. So I think I saw a AAA rated asset-backed security, which was backed by subscription lines. And, the bank that arranged that deal and structured that deal is no longer with us. And I suspect the lender of the vehicle is no longer with us as well. But again, we talk about innovation. This is a structure that existed, nearly 30 years ago. And if you think of the last couple of weeks, the positivity and the euphoria around subscription line CDOs that have been raised recently, you think, well, it's not really that new. It's been 30 years old. So I think what we're seeing is more an emergence, more visibility of an asset class, and it's now becoming into public sight and public visibility rather than being behind the scenes. So, you spoke about it, and your audience today and your listeners should be very excited because it's a significant part of the ecosystem. It's a significant part of finance. There's significant volumes there. And I think it's a very, very exciting, lucky area to be involved in if you're in this space at the moment. In terms of product innovation, I think you're exactly right as well, that this is almost in some ways like private credit in the early days of leverage finance. There's a huge amount of flexibility and bespoke nature of what these agreements will look like, the types of leverage that you can draw on it, the security, and a lot of that's supported by the inherent complexity in terms of GP domicile, security pledge of the underlying assets, the mix of the underlying assets, how you actually assess the nature of rights of security on LPs and how they all work. So there's so many really intriguing moving parts here that require smart people, really intelligent innovation. And that's before we even get into the delivery mechanisms. You know, maybe the new delivery mechanism will be through securitization. We're already seeing a lot of the channels to create further growth being done through credit risk insurance and through some of the banks using portfolio management tools to free up capacity to do more. So we have all that. And then on the actual demand side, you've then got GPs looking for a little bit more innovation and ingenuity to give themselves more optionality. Certainly private equity is seeing a slowdown of exits, and maybe that's backed by the lack of an IPO market. The venture capital market, GPs again are seeing less pops, less significant valuation rises. So there's a need to create more flexibility and optionality to maintain and extract further value from some of the portfolio investments. And then you're seeing the rise of new forms of GPLP structure, specifically private credit, which again is interesting if you can add secured and lower risk types of optionality to add a little turn of leverage and create a little bit of extra return. So they're all really, really powerful and exciting motivations for what's happening. I think there's some challenges within that. Maybe we touch upon those in a second, but certainly when you have growth like this and when you have the pace of significant change, it creates an atmosphere of real energy, real excitement, and thought leadership in many respects.
Yeah, indeed. With evolution, you have always challenges or headlines. So, from your perspective, what are your thoughts about headlines that can happen and be, and also what are the opportunities that you see?
Yeah, let me take the negative one first. The negative one is obviously the challenges, and I think in many respects, and you've seen the LMA has published a few blogs on fund finance, and we've tried to dispel some of these myths. I think some of it is exactly that. It's rhetoric and headlines, and many headlines are more attractive when there's an element of negativity to them. So people want to read less the positive stories. They want to read more the woe is me, it's the end of the world, this is terrible type headlines. So I certainly think what we've seen has been more on the negative space, and really playing down the fact that this actually is good in many cases. In fact, the majority of cases for both GP and LP, there is real benefits to the why, and it is about optionality and attracting and building the inherent value in a lot of these portfolios. So I think the negatives come from how do we manage headlines. I think my members want the LMA to almost be a brand shield and be the voice for the market so that we can speak and dispel some of those myths. Doing conversations like this is great. The LMA's had a series of events. We will publish blogs, so we will try and do that. I think the other challenge, and I don't think it's a negative, I think it's actually a good challenge, comes from the regulators. The regulators have increasingly been asking questions over 2 years around private markets. Now, private markets creates a very, very broad church of what is included in that definition. But ultimately, when you have private markets, the nature of the beast is the definition says private. And with private, you have limited information, limited disclosure, and there's an opacity and lack of knowledge, facts, data fields. So I think the regulators are very, very correct to look at how do they get their heads round the asset class, and by the asset class I mean private markets, Michael. I don't mean specifically funds finance. So how do the regulators overall assess what is happening within private markets? How big are private markets? Are there leverage involved in there? If there is leverage, where is the interconnectivity of that leverage? Does it come back onto the bank system? If it does come back into banks, which are regulated entities because of the deposit base, how are the guardrails tracked and monitored and assessed? So I think the emerging challenges come from almost it's coming out of the shadows, this asset class. There is a lot of attention on this asset class. It is a significant asset class, and it is tied to private markets, PE, and private credits. And I think the work to be done and the opportunity getting to that, the work to be done is education, information, how we're speaking today, collecting data, collecting market intelligence, and being able to talk specifically and authoritatively around those kind of metrics, those measures, those KPIs, and demonstrate that you have really, really strong levels of protection. You have really, really strong guardrails. And I think looking at covenants, looking at leverage ratios, looking at max LTVs, looking at the quality of the structures to delever and pay down, these are all the facts that need to be drawn out to not just dispel the myth, Michael, but actually to inform and educate. I think there's some work, certainly the LMA is looking at is around that education. It's around trying to look at taxonomy of language. I think the nature of these deals there is a large element of bespoke negotiation. So I don't think you can have a standard documentation, but I think you can have a standard taxonomy and some standard definition so that you've got consistency and the correct framework to readily apply the risk base. And certainly I think the LPs probably need a little bit of guidance and help to kind of understand so that they get more familiar and more aware of the optionality that they are giving the GPs, but ultimately the protections that they should have and how uniform they need to be, and the benefit that is being ascribed to the LP through having the optionality at the GP level.
Thank you, Scott. And coming back to the LMA, so what are your member requiring from you generally?
Because of the broad church of members that we have, Michael, I think you can imagine the telephone calls coming into my LMA team. A lot of my members want very, very different things. And the hard thing is looking at how you prioritize it. We are a member association. I have a great team. There's 25, 26 people here in the business. So we have good people here. Some of my members very, very happily want simple things. You've been to one of our events. My members love the LMA events. They love the content, they love the networking, and they like the opportunity to meet and collaborate through a LMA branded event. So that's the kind of an easy one. The limit is how many events do we do and maintain the right level of quality. Some of my members at the other extreme, they want advocacy and they want lobbying, and they want us to be very, very strong on protecting and maintaining the integrity of an asset class. Funds finance is one where my members are. We want the LMA to work on common language, common taxonomy, and providing education and benefits to make sure people understand it more. In the UK, one of the regulators had issued something recently, start of the year, the Dear CRO letter, which went to the banks around private markets. And some of my members would like the LMA to help with counsel and guidance on what the right kind of things they should look at as a member. So how should we help with, best standards, best practices, and a good common read across? Many of my members are looking at what is the LMA doing on technology? How are you looking at guardrails on the application of AI and large learning models? What are you doing to advocate the use of tokenization and blockchain to increase the distribution and product channels to either raise AUM or distribute risk into different areas? So it's really exciting to have such a great number of members, but it does create my current challenge, Michael, is how do you prioritize the book of work? My institutional investor community, or the buy side community, is probably one of the biggest priorities for the LMA at the moment. Most of global finance is coming through the buy side or institutional investors. The size of private credit, the size of private markets, the leverage finance market, and the application of CLOs. So it is a very, very big voice. And that's something which, again, the regulators are looking at with regards to NBFIs and how they get more transparency and more visibility of the activities and ensure we have the right guardrails, or more importantly, that capital is being used to support Draghi's CMU, or in the UK to promote consistent and regular and strong financing available to all parts of the community. Same in Africa, which has different challenges. Same in the Middle East, which has different opportunities and challenges. All the members want different things, but ultimately, that's a long answer, by the way. Ultimately, the simple answer is the priority will be driven by what makes the most impact to efficiency, liquidity, and transparency on the loan markets. And by doing that, make sure we get the right transmission of capital to borrowers, Michael.
Well, thank you very much, Scott. And if you have a picture of success for 2025, what it would be?
There's a couple of easy measures of success, and funny enough, I don't actually like them. But the easy measures of success are obviously we increase our membership, and there's certainly capacity to increase LMA members. We could have more practitioners in the fund finance space. There's a growth in credit risk insurance and SRTs. There's a lot of buy-side firms being set up. There's a lot more asset allocators. So there's some wins there. I think some of the other measurable, observable wins are obviously, your penetration through communication, what happens on your LinkedIn, on your socials, on your feeds, and make sure you're impactful and visible there. I like two softer objectives. I want to look back at the end of 2025 and feel that we have had a real support from our members through their contribution to our work. And if we do that, I would be really proud of the team, because we will have had significant member engagement, member involvement, and reached member consensus on the end result. I think that would be really successful. I would like to feel at the end of 2025 that the global regulators and the national regulators respect the voice of the LMA as an authority and as a knowledgeable and trustworthy source, and they are having us sit down at the table as part of the conversations around what should they do to promote continuation of lending, economic growth through the loan markets, continuation of sustainable finance to protect the planet and ensure that we are driving that in the right way. Those are harder things to measure, Michael, and they are a little bit softer, but I think I can look back and I can see signs of the re-engagement from our members, the re-involvement of our members through energy, through challenge, through contribution, through demands. Scott, LMA, we want this. That's a good thing.
Thank you, Scott. And indeed, your conference in Paris was a great one. So it was your first European loan conference in Paris at Musée du Quai Branly. It has been a great and insightful conference. So in terms of events on the pipe, what do you have for the LMA?
So The LMA, as I said earlier, we will always do events, and one of the goals has been to make the events relevant, relative, based on what was happening in the markets, and have the attendees sit on the edge of the seats with great speakers and great content. And we've done a really good job this year. The team's done a great job covering areas like credit risk insurance, SRT. We have a sustainable finance conference this week, which is going to focus on blue finance and then looking at the promotion of equality. So these are really, really important things. I think the ones I've been really pleased with, we launched a program this year called Future Lend, and it was aimed at the lenders of tomorrow, buy side and sell side, almost like that future talent or that young talent pool. And it's agnostic to the activity of the individual. It was more about Michael giving the younger talent or that talent pool ideas about how to build their personal brand, how to look at their own personal career, how to actually make and think about decisions, seek a mentor. I mean, I spoke about this right at the start about overcoming challenges through your career, and I wanted to set something up to share that with this emerging talent pool of our members. So we'll do 2 of them a year. I think we're going to work with a third-party firm called Deal Catalyst and do a funds finance event, which will be held in London in January. We will do a private markets event in Abu Dhabi in partnership with ADGM and Deal Catalyst and the LSTA in February. And I think on that, I'd be looking to do a series of small roundtables with the LPs in the Middle East to talk about specifically funds finance and NAV lending and provide that little bit of education, which I think is really important. But given our members, we will need to be in South Africa, we will need to be in Kenya, we'll need to be in the Lagos. So we will need to do Africa, we'll need to do the Middle East, Dubai, Riyadh, Abu Dhabi. I've got Scandinavia, Italy, Spain. I think it's about making sure that we're representing all of the members. And I think what I'd really like to do, in addition to the big events, is more smaller roundtables, Michael. I'd like to do 12 people, 15 people. What do you really care about? What can the LMA do to help? And actually have smaller groups share the real impactful pieces of work. I think that makes a big difference to what we do. And if we try and run that in tandem with great communication, some thought leadership pieces, some really insightful periodicals. I mean, you've done a great job on establishing this channel. I would like the LMA to have some great content, some great socials, and be able to build a strong media presence where we can tap into areas like this as well. So I think we have an exciting book of work for 2025. We'll probably do 2025 big flagship events covering either specific countries, specific geographies, or specific verticals. I'd like to do a technology conference. As I mentioned, we're really fortunate. We have about 80 companies who are members who are in the technology arena, whether they're software as a service, whether they're actually full scale solutions, whether they're actually early stages of disruption. And I think I'd like to do something to help them evangelize their story, to work with the regulators on some of the digital sandboxes, to look at the benefits and use cases of modern technology to improve efficiency. So I'm very, very keen on having a flagship technology next year as well, Michael.
Thank you, Scott. It looks like a busy and exciting year 2025 coming. So thank you very much again for your time and for this insightful discussion. And thanks as well to the audience for your time and your attention. And see you soon for our next Fund Expert Talk. Bye-bye. Cheers.
Thank you so much, Michael. And I hope at the end I can maintain that kind of establishment of being an enthusiastic amateur and knowledgeable to a degree about fund finance. But thank you very much for having me.
My pleasure. I think that you are already an expert. I can say with from your insight that you are already an expert in fund finance.
Thank you so much.
Thank you, Scott. Cheers.